So here's a copy of Buy Now or Wait for the Interest Rate to Come Down analysis I put together for a client this Monday. I want you to have a copy, also go over some of my thoughts, hopefully the information you find useful. So the client is pre-approved for $800,000 purchase price here in Los Angeles County, putting a 5% down payment or $40,000 in this case. So he's going to borrow approximately $760,000 as of Monday. The interest rate is approximately 6.99%. The APR is 7.709. 30 years fixed. Principal and interest payment is going to be $6,369 per month. I will also provide the link for this actual analysis where you can click for more information to see the itemized breakdown of principal and interest, property tax, insurance, and mortgage insurance amount figure. So cash to close approximately $57,000. Although he's pre-approved and is eligible to buy this house at this scenario, but his thought is perhaps I might be better off to wait for the interest rate to come down 0.5%, 1 full percent, hoping by waiting, he potentially is going to have the chance to lower his housing costs and be able to afford the same house or maybe afford a nicer home as a result. So as what I share with him, imagine the interest rate does improve by 1 full percent for a moment. Instead of 6.99%, the market now offer him the option, the ability to acquire this the mortgage term at an interest rate of 5.99%. But now we're not talking about thousands, we're talking about potentially tens, if not hundreds of thousands more buyers will come back into the marketplace, right? So potentially he's not only going to be competing against more buyers, the seller also smells more blood because when there are more competitions, the listing agent sellers is not going to keep the home at $800,000. They will very likely will list the home at $840,000 or more, right? And when he does choose to make a full offer, even at $840,000, is he likely to get his offer considered? Probably not, because remember, he's also competing against 5, 10, 20 other potential strong candidates also, right? And many of them could have 10%, 20%, or even 30% down payment available in order for him to be able to edge out all the other offers. He now not only has to pay more than the offer price, he has to go up way above it, right? So potentially, if that's the case, for a moment, he now end up buying the house at $880,000. So remember, the seller lists the homes at $840,000 because they smell blood. There's tremendous amount of buyer demand out there. There are 20, 30, 40 buyers coming to the open houses. They list the house at $840,000. He bought the house. In order to get it, he had to pay $880,000 to acquire the house. $880,000, 5% down. He now has to borrow $836,000 to finance to buy the house, even though the interest rate is at 5.99%, interest rate 6.707% APR, 30 years fixed. His new projected monthly payment would be $6,437.04 per month. Cash to close, a little over $61,000 more, right? So instead of saving money on his monthly mortgage payment, he's actually going to pay potentially $67 more per month, right? On top of it, he gives up the potentially $80,000 the home appreciation. Also, he gives up the principal acceleration that he pays down for the next 3 months, 6 months, or 9 months, right? If you buy the house today, he's able to make 3 months, 6 months, or 9 months worth of mortgage payment. Potentially, he's going to pay thousands of dollars off his mortgage balance in the next 3, 6, 9 months, waiting for that interest rate to come down, right? So let's take a look at the third column, which is something I share with him, is if he's able to buy the house today because he's qualified, he's able to afford that payment. Although, of course, I understand he prefers to pay at a lower interest rate, and I definitely respect that, right? But he's able to get that house of his dream. And when the interest rate does improve, whether 3 months, 12 months, or 18 months from now, if he's able to refinance, even factor all the closing costs, total assumed his loan amount is the same of $760. The fact that he now only pay a 5.99% interest rate, 6.437% APR, because now the home is priced at $880,000. His mortgage insurance is going to be cheaper. As a result, he's going to pay approximately $57.62 per month instead of $63.69, right? He has the potential to save $600 or more every single month by buying his dream house now and refinance the house when his has the chance. When the interest rate does come down, again, 3 months, 6 months, or 18 months from now, he's able to reduce his cost basis. And meanwhile, he's able to enjoy the appreciation and have paid down his principal balance in the meanwhile. So take a look at the information. Let me know if you have any questions. Love to get your thoughts. I understand that not everybody are as optimistic with the Southern California real estate as I am, but I'm really truly believe this is very, very likely to happen. Love to get your thoughts. Have an amazing day, and thanks for watching. Bye.